A short squeeze is what happened to GameStop in 2021. Hello and welcome to another episode of Moneywise. We help you to make sense of the world of personal finance and investing. In today's episode, we're going to look at how bad actors try to cheat the market to gain an unfair advantage. In a game, these are like the cheat codes, except these cheats will land you in prison. Before we begin, here's some terms we will be using today. Short selling. When you buy a stock, the only way you can exit is to sell the stock. If the price increased, you make a profit. You buy low and aim to sell high. With short selling, you reverse that order. You sell high first, and to exit, you have to buy the stock off the open market at market price. If the price dropped, you make a profit. Short selling is a way for traders to bet that a stock price will drop. Option. Options are financial derivatives that give buyers the right, but not the obligation to buy or sell an underlying asset at a set price and date. Options are risky, but if used properly, they are a great way to make money from the movement of a stock's price without having to buy or sell any actual stock. Options also allow you to set your maximum risk, so you can control how much you lose if the market goes against you. First, we have what is called a short squeeze. Short sellers only make money when the stock price drops. However, if the stock price rises, short sellers begin to lose money. The problem for short sellers is that if they decide to cut their losses, they have to buy the stock off the open market, and in doing so, they increase the buying pressure on the stock, squeezing other short sellers even more. A short squeeze usually occurs when there are a lot of short sellers for a particular stock. A sudden sharp rise in price could trigger a short squeeze. So why is a short squeeze labeled as possible market manipulation? Simply because with enough capital and coordination, a short squeeze could be carried out on purpose. The lesson here is that you should always manage your risk properly. If you think you're caught in a short squeeze, cut your losses early. A short squeeze is what happened to GameStop in 2021. Next, we have front running. Any market participant can commit this offense in various forms. It is usually committed by people of influence or who are in a position to obtain price-sensitive information about other people's investments. Essentially, the mastermind is aware of a person or entity wishing to purchase shares at a particular price level. The mastermind then buys these shares earlier and at a much lower price compared to their victims. Once the victims start buying the shares and price moves, usually up, the mastermind then sells their own shares for a large profit. Sometimes, the victims actually end up buying their shares from the mastermind himself. Another example of front running is a person of influence making statements to move the price or urging people to buy a stock. Be careful of this, because it could mean this person has already bought earlier at a lower price, and they just need enough victims to listen to them so that the price can rise and they can sell for a profit. In the US, Elon Musk is being investigated by the SEC for declaring his large position in Twitter later than he was supposed to. Elon potentially saved hundreds of millions of dollars because of this. If public investors had known about his large position, the increased demand for Twitter shares could have raised the price, and Elon would have had to pay more for his shares. The SEC takes this very seriously and is investigating because it may appear Elon gave himself an unfair advantage. However, what is stopping other big fish who can move markets like Elon Musk from front-running retail investors? These big players can buy up shares or options up to the legal limit that does not require disclosure, then conveniently drop a tweet or publish a report that moves the price. Next, insider trading. This occurs when an employee of the company who has material information trades the stock before this information is released to ordinary retail investors. The insider can make important trades before the public does, and therefore has a massively unfair advantage for making huge gains. The simplest example of insider trading would be for an employee who has access to financial information. If they knew that the company did really well that quarter, they can slowly buy up shares or options and then make a lot of money selling just after the report is released. Next, we have pump and dump. Here, the objective is to create fake volume and liquidity on an obscure stock. The price is pumped up over a period of time and then swiftly dumped on unsuspecting retail investors who bought in along the way up or at the top. The masterminds that started buying at the very bottom reap the highest reward with massive gains, while ordinary retail investors are left with huge losses. once the masterminds dump the stock and price totally collapses. In the stock market, pump and dumps usually target penny stocks because the capital required to move such stocks is more manageable as compared to a stock with a huge market cap like Apple. Pump and dumps have been especially prevalent in the crypto market, with several groups popping up in messaging apps. The lesson for retail investors here is this: don't play in securities that are susceptible to manipulation, and control your fear of missing out, or FOMO. FOMO is where you feel you have to jump in on the action. Otherwise, everybody else is going to make money and you miss out. Bigger players can use this emotion against retail investors, much the same way fear and panic can be used. When it comes to poop and scoop, do you notice how there are always reports by big players in the market or even TV personalities that try and paint a story of doom and gloom, making strong statements about why you should sell or how there's a massive crash coming? Now, retail investors get spooked and panic sell. But who buys from them? That's right, the big players who spook them to begin with. In other words, don't get outplayed by the big fish trying to psych you out. Do your own homework and block out the noise. The reverse is also possible. And that's sort of a quasi-pump and dump, but works the same way. Big players will talk up a stock and paint it like you could make huge gains buying that stock. So when the price starts rising, you begin to feel FOMO and are lured in to buy. But again, who is selling to you at this high price? You guessed it, the big fish again. The lesson here is simple. As a retail investor, understand that markets are not always tilted in your favor. Don't let emotions control you. In wash trading, one or more masterminds work to create false trading activity. This gives others the illusion that there is market interest or volume in a stock, when in fact buyer and seller are colluding, or sometimes even the same person. Fake trading activity lures other investors to buy in, thereby pushing the price up. This allows the mastermind to sell for massive gains. Wash trading can be used in conjunction with pump and dumps, or sometimes as a means of money laundering. Again, the lesson for retail investors is don't play in securities that could be susceptible to manipulation. Spoofing happens when a trader submits orders that they do not intend to fulfill and will in fact cancel. This creates a false impression of supply and demand for that security, as the trader hopes to move the price in their favor. Meanwhile, the trader has entered a small set of genuine orders at the manipulated price level. If the mastermind succeeds in spoofing, they will be able to execute their real trades at prices that are favorable only to them, while causing losses for other participants. To wrap up, if you're not careful in the markets, you could get tricked. Even if the mastermind was caught by the authorities, you are still left with massive losses. So always manage your risks, be alert, and control your emotions. Remember, if it looks too good to be true, it usually always is. Thank you, and see you again for another awesome episode of Moneywise.